listening to the Charles Aris podcast, driving commercial excellence through revenue operations. In this episode, Charles Aris practice leader Brian Landau sits down with Alexis Underwood, managing director at Wynnchurch Capital, to explore how private equity firms evaluate commercial talent and build value creation strategies within their portfolio companies. Together, they discuss the role of revenue operations, pricing strategy, sales effectiveness, and change management, as well as how investors determine when to invest in new commercial leadership. Let's dive in.
Hi, and welcome back to the Charles Aris podcast. I'm Brian Landau, and I'm a practice leader here at Charles Aris, where I lead our go-to-market executive recruiting practice at the firm. Today, I am overjoyed to be joined by Alexis Underwood. Hi, Alexis.
Hi, Brian. How are you today?
Doing great. Alexis is a managing director at Wynnchurch Capital. Prior to joining Wynnchurch, Alexis held various leadership positions at several Koch Industries companies, including most recently Guardian Glass and Georgia Pacific. Alexis has been involved in driving increased profitability through commercial excellence, improved go-to-market strategies, and optimized pricing for portfolio companies. Alexis has a bachelor's in communications with a concentration in commerce from the University of Pennsylvania. This is so fun. Thank you for hanging out, and we can geek out about all the stuff go-to-market together.
Very excited to be here. I think this is going to be a fun topic.
For sure. So we just read a moment ago in your bio that you're involved in, quote, driving increased profitability through commercial excellence, improved go-to-market strategies, and optimized pricing for portfolio companies. Maybe let's just start there. Like, what does that look like practically on a week-to-week basis, and how you interact with colleagues at Wynnchurch, but also executives at your portfolio companies?
Absolutely. So in my role, I lead diligence for kind of my commercial areas and all the way through to value creation. And we do a lot of pricing work and a lot of Salesforce excellence work, kind of improving how the sales teams function. So that means if we're looking at buying a company, we're investigating what that company looks like right now and deciding what we're willing to underwrite and what we think the future potential could look like, all the way through then to partnering with the management teams to say, what are we going to go after? How fast are we going to go after that? And hopefully we just go win together.
So you just touched on this right now, but a major consideration for you is talent and whether a potential or current portfolio company has the right people in place. When you first roll up your sleeves on a potential investment or with a portfolio company that you're already operating with, where do you start when considering the talent needs of that business?
So if we're doing a diligence, for example, on a company that we're looking to buy or an assessment on a company we already buy, I'll typically do kind of an analytical assessment and then also more of a qualitative assessment. The analytical assessment will go through and look at kind of where the pricing is today and do a basic segmentation, look at those cohorts and look at what kind of the dispersion looks like, for example, on pricing. We can do something similar on the sales data. And I have a 5-year-old son, and the more that the data looks like one of his finger paintings, typically the more opportunity that exists. Of course, we're a little more scientific than that, but that tends to be a good sign when things are kind of all over the place that there's going to be a lot of opportunity there. Then, obviously we'll also do normal like CDD where we're talking about TAM, SAM, SOM to see like how much opportunity in the market is there and how much room there is to go after that. But I also find that qualitative maturity assessment is really valuable. And so there we'll look at things like both for pricing and sales, what's the strategy, what's the org structure, what are the processes, what are the systems, and then what's the change management and accountability that are in place today. And so that tends to give us a pretty full picture of, what do we think the size of the dollar opportunity is? And then what would we need to improve on to go get it? Wynnchurch buys mid-market industrial companies, and oftentimes we're some of the first institutional capital. So a lot of the time we're going in, and on the sales side, they typically will have a sales leader, but a lot of the sales has grown through relationships. Like they've got a great product, a great position in market, but they don't necessarily have the most structured, rigorous selling process that's being driven with KPIs. Oftentimes when we look at pricing's done by 5 people and it's kind of 10% of their job. They typically won't have a dedicated pricing resource. And so when we go in, we just try and understand what is that org structure today? How are they getting things done today? and then what's going to need to change in the future.
I have never looked at one of my kids' finger paintings and thought, look at all this opportunity here. You're a good mom, Alexis. All right. So you're describing a couple different things when you first dig into a portfolio company or potential portfolio company. Like what you're describing in some ways is like the investment thesis, right? Like what levers are available for us to pull that will help drive the value of the firm moving forward. And it sounds like pricing or the lack of clarity around pricing, right, is sort of an initial place where you're looking at. If you were to stack rank on a typical investment, it's pricing, it's leadership, it's the CRM cleanliness, or even if there is a CRM, like where are you typically looking at and saying like, here's the things that like the easy to get and the medium to get on that investment checklist?
Yeah, so pricing tends to be a big one. We do pricing diligence and then pricing value creation at almost all of our companies. And then I'd say sales force effectiveness tends to be kind of the big next group. And again, we're talking about mid-market industrial companies are most of my companies here. And so those tend to be big levers. Pricing is often an easier one to work through and identify during diligence because you can look at transaction data and you can get conviction that even with just some internal cleanup, that would be easier to go after. Sales is often in diligence is a bit more qualitative. A lot of these companies don't have a CRM, or if they do have a CRM, the data is not particularly reliable or rigorous. And oftentimes in that diligence period, only your head of sales is going to be kind of under the diligence umbrella. So you're having to make some more kind of directional bets. And then once you buy the company, you get in very quickly and reassess when you have access to kind of the full suite of resources and more of the information that they can give you both quantitative and qualitatively.
There's something of a dance between the perspectives of the PE firm, the realities of the business, and then potential third parties. Maybe it's a search firm or it's an agency that's supporting around organizational development or talent assessment. Specific to talent, how do you know where the responsibilities start and end? How do you know when to pull in a third party potentially to provide that expertise? And what are those levers there along the way that helps drive the most efficiency and value specific to team formation?
So in that kind of assessment, part of what we're looking for is what is the existing management team's capability in these areas? And then trying to understand what is the size of opportunity and in what areas. And then we are also, typically this is the alignment that kind of comes after, where we're trying to understand what is the magnitude of the transformation that's needed, how fast do we want to do it, and what are the kind of competing priorities. And so that gives you kind of the foundation of what you're going after. And you can say, okay, this is the team that we have today. We have a huge opportunity that we want to go after quickly. How are we going to close that gap? And there can be different ways you close that gap. It could be, we're bringing in a third party and they're doing a lot of the heavy lifting. And then the internal resourcing is going to be more of a maintenance. Because so much of RevOps is change management focused, we often lean into getting like the right resource in there early into the company. And even, bringing in somebody that's at a slightly higher level than what you would need for maintenance over time, because that if it's going to be a bigger transformation. And so, if it's big opportunity, big transformation that's needed, oftentimes we're looking for a more senior kind of RevOps person. Sometimes we're saying, hey, we need a chief commercial officer in there or a chief revenue officer. Other times, if it's a more discrete opportunity where we're like, oh, we just really need to improve kind of the price process. Maybe you're talking about a price director. And so we really try and let the opportunity drive the resourcing needs. Brian, you also mentioned kind of like, how do you think about using a third party? For me, in these RevOps roles, fit is just so critical and the expertise is so specific that I honestly almost always use a search partner. In my role as an operating partner, I'm always thinking about how do I get the best return for like an hour of my time? And working with a search partner like Charles Aris really gets me to those critical top candidates quickly. And honestly, they typically all exceed kind of my minimum bar for that role. And then it's much more about choosing which one of those candidates is going to be the best fit for this company, this team, this situation.
You mentioned RevOps just now, and I want to go a little bit deeper here because you and I have geeked out about this a little bit in the past, and so let's record our geekiness here today. Maybe you could just define what you mean by RevOps, because it is a function. Like, you will see a director or a VP of RevOps, but you're describing, I think, something a little bit different, which is almost like an operating model for the commercial organization. Maybe we could just a quick definition on that.
Yeah. So when I think RevOps, I do think of it as the operating system for commercial excellence. It enables a business to consistently convert market opportunities into profitable growth. And it does that by aligning commercial strategy with execution across the sales, marketing, pricing, customer success, customer service, finance, and operations team. It connects those people, process, data, technology, governance into the commercial engine. It provides the analytics, the insights, and helps drive the operating rhythms that improve decision-making and execution. And it really helps you drive sustainable revenue growth and the associated, hopefully, margin expansion that drives that long-term enterprise value. My definition of RevOps specifically, and like when I'm defining a role, I do find that it varies at each company kind of based on the needs. It typically includes some combination of pricing, sales operations, marketing operations, and commercial systems like a CRM. But we certainly have RevOps roles that are 80% pricing versus in other companies, we have RevOps roles that are like 80 CRM focused because that's what that company really needs.
Just as an observation, I think scaling software businesses have invested in RevOps as a function, and you're championing the operating model and the function really in mid-market, industrials where it's not as common. So you just defined it a little bit and how it can change from portco to portco, but in its sort of best version of itself, this role is doing what for the commercial org exactly? Like, you're talking about CRM, you're talking about pricing. It's a big mandate. What are the three outcomes, hopefully, of a successful, execution of RevOps in an industrials business?
Yes, you bring up a really good point. I think sometimes in SaaS companies, a RevOps role is more focused on kind of the strategy, like that go-to-market piece where you're saying, where are we going to focus? What's our ideal customer profile, our ICP? How are we going to go after it? I think that often in industrial companies, they have customers that really like them, that buy from them consistently. And so a lot more of the RevOps is, really how do you more finely tune the sales path? How do you use data to really increase the rigor and improve the outcome that the sales team is doing? How do you make the sales team's time more effective? There's a KPI that I love to use. It's called ROSE, return on sales expense. So, how do you over time make every dollar you spend on your sales team give you more dollars of revenue, more dollars of margin? And so, ultimately, when you come to a RevOps role, you're looking to improve some of those key KPIs, both kind of with the leading and lagging indicators. So to me, ultimately, success in a RevOps role is when the points hit the scoreboard, meaning when the dollars show up in the bottom line of the P&L. And, I'll use things like net price realization, the difference in price and cost over time and that gap, that margin growing, and then that ROSE, return on sales expense, as a measurement. And then, I often, when putting in a new RevOps person, will look for improving leading indicators of activity. So things like, do all your salespeople now have a quota? Is that quota by stage of the pipeline? So sometimes those are yes, no type things, but starting with some of that fundamental kind of enablement activity, and is that happening? And then you progress to like the leading indicators of progress. So is the pipeline filling up across the stages? Is conversion between the stages improving? And then, ultimately getting to things like lagging indicators where you're saying is win-loss rates improving, are some of the real key things that I see a RevOps role in an industrial company improve.
That ROSE KPI is super valuable. Do you count demand gen expenditure as part of that expense or no?
Usually, yes.
Okay. So it's almost like a shared with marketing potentially on how the company is structured that contributes to the ROSE metric.
Yep. Yeah, I'd say for me, it's most important that the company defines it consistently. In a lot of industrial companies, we're not doing a ton of marketing. And so you have the sales team, you have marketing, and I'll often put customer service, customer success, or any inside sales in there as well, because you're looking for improvement over time. And there are benchmarks of like what that should look like. But to me, it's typically that improvement that company is seeing. Because ultimately, if your company is growing and improving, there's going to be these times when you say, should we add another sales resource? Should we be investing that in, especially now, like in AI for our existing team? And, that kind of return helps you understand where you are at various stages of your development.
For a mid-market industrials business, is there a certain profile that you like with respect to talent for this type of role?
So I'm often looking for kind of what I call an extroverted analyst. So somebody needs to have the analytical rigor because ultimately a lot of these businesses, you're moving from more of a gut feel towards more of like a finely tuned engine where you are using data to improve your understanding of where you should focus and what you should do. But most of the job, at least in my industrial companies, is actually change management. So they have to legitimately like talking to people and specifically talking to salespeople. And, so it's that kind of like high EQ, but also solid in the analytics. And I think it's why it's sometimes a tough job to hire for, because that's not a super common profile. And, and the fit with the team, how you go influence a sales team that is, very outgoing, very transactional is going to be very different than how you influence a sales team that, is very senior, maybe has almost exclusively relationship-based selling. And so that fit becomes so critical, and it's that EQ and how they're going to influence the sales team is so important. Like, I'll take kind of directional analysis implemented with conviction and thoroughly any day over, more precise analysis that nobody's listening to.
Yeah. You're looking for a therapist a little bit, right?
Oftentimes, yeah.
You're a coach therapist, right? I've seen these roles report into a chief revenue officer or a chief commercial officer. I've also seen it roll into finance. And I think the answer might be, it depends who your leadership team is. But do you have a preference, all things being equal, as to where this role reports into?
I think it goes back to what's the real opportunity that you're going after. I think if it is more pricing heavy and more governance kind of, then you lean more towards having it not report into sales and have it report over into, usually into finance. So you don't kind of have the fox guarding the hen house type scenario. But regardless of where it reports, I think it always needs to kind of feel like the right hand of the sales leader. And I'd say I've never seen it succeed or fail based on the reporting line, but it can kind of plus or minus, 10 or 20% better in one place or another based on the opportunity, based on the company, and based on the talent that you have on the field.
Let's imagine for a second that we've invested in this function, right? And we're starting to put points on the board, right? What happens next? Like how do we continue to build that momentum? How does it continue to scale? How does this investment compound? Is there another sort of key role or key function, or does the role need to evolve at scale for it to continue to be effective? Do you have a point of view on that?
So there's typically a couple key phases. So there's certainly that assessment piece where you say, like, what are the big areas that we're going after? And that can be, your dollar value, that can be improving parts of that function. Then typically comes a big transformation phase where you're putting in place the stuff that will actually let you get that transformation, go after it. Sometimes that's a CRM, sometimes that's a pricing process. Like you're doing that big transformation. And oftentimes, that will be maybe a new RevOps resource and a consulting firm to help you really push through that piece, third-party support, an integrator. And And so you kind of get through that transformation phase. And then once that transformation has happened, that implementation has happened, then you're really going to go after the value. And there's typically a ramp. This stuff a lot of the time doesn't happen overnight. A lot of it is determined by like, what is the selling cycle of that company? So, if you have a 6-month, year selling cycle, it's going to take a few rounds for this to get better and get improvement. So it doesn't happen overnight, but that lets you kind of more finely tune it. And I often think of it as like, you're going to get a chunk of value, but then you're going to continue iterating and optimizing. We live in a very volatile time right now. The market is always changing. And so what worked 2 years ago is probably not going to work today. It's one of the places I'm thankful for my background at Koch Industries. Some of the biggest organizations I've seen most sophisticated with pricing, like they still have 50-person pricing teams that are still going after, the last tenth of improvement. And for me, it really is a continuous improvement. I kind of compare it to yoga. Like no one ever goes like, yes, I won at yoga. It's like, it's a practice, right? And I think a lot of the commercial engine work is that you continue to tune it, you continue to improve it. And so while you'll get a big chunk of value early, that refinement over time is what really makes the value durable, sustainable, and lets you hopefully get every 10th out of it that you can.
I'm going a little off script here, but I do want to ask you about marketing because you made a comment a couple moments ago about how a B2B industrials business maybe is not doing demand gen in the way that a software business would, right? They're not on TikTok buying ads necessarily.
Right.
What is working in marketing? I mean, there's events and they're sponsoring events, and maybe more sophisticated businesses could do like an account-based marketing type tactic. Marketing is harder than ever for a whole bunch of reasons. Like, what's working right now in this setting?
So short answer is it depends. It depends on the company. But I think that's where you come in and you understand the current funnel, the current pipeline, and where are we lacking? Where are we not converting? And, there are companies where you say, okay, it's at the front end, like we need more new logos coming in the pipeline. But one thing that tends to be a little bit more unique about these industrial companies is they do have a sales team, right? And so like throwing out a LinkedIn post versus having like a salesperson have 20 companies that they're really going to be dedicated and trying to get into, you got to think about which one's better for the situation for that company. And so a lot of the time in mid-market industrials, marketing is actually like sales enablement. And, some of the marketing resources we've hired recently, they've been like 80% sales enablement. So you're saying, okay, like there's a misperception in the marketplace that we aren't as good at making the widget brightly colored as our competitors. It's a misconception. We can do it. And so like the marketing will say, okay, how do I arm the sales team with the information so that they can go call this customer and tell the story better? As opposed to like, I think more of your traditional marketing would be like, yeah, let's create a video, put it on TikTok about how great we are at making bright colors. But, a lot of our buyers aren't in those same environments in that same kind of way. And so it's understanding like what's the best way to change that buyer's mind. And a lot of the time in industrials, you're kind of going back to basics and, you're saying, hey, these are people, they have, this company has needs. How do we show that we can close the gap on those needs? But kind of it's more of that marketing for sales enablement. And of course we do some of the other stuff as well, but we find a lot of the time that we get a bigger return by using the sales team that we have as a major resource to leverage. I think, there's certain things like, that you want to make sure that you have clean hygiene on, like, oh, you go to a trade show, like make sure you get the leads and make sure that those processed through it are assigned, things like that. But that's how we really end up using marketing a lot more today as that sales enablement resource.
I'm going to let you go in a minute, but before I do that, I'm going to put you on the spot. What is something that the best businesses are doing at a world-class level? And what's something maybe that you're seeing in the market of like we got to get better at this thing. Like, this is an area for us to improve?
So I see the best businesses, they really have a willingness to lean in, a willingness to partner, a willingness to challenge themselves, a willingness to think through various things. Like oftentimes in private equity, you're coming in and what has gotten a company to this point isn't what's going to get the company to the next level. And so I find that the companies that are really hitting it out of the park, like have that willingness to push and to experiment. I think the companies that don't, they're much more guarded. There's a fear to experimenting and to pushing. And I think some fear is healthy. You want to make sure that you don't break your Ferrari when you're trying to upgrade the engine. But I think that really has to be in balance.
What are people getting wrong right now?
I think, people are getting wrong that fear of experimentation. And I think especially like in the age of AI, there's a lot of places that you can be leaning in. But you need to lean into that speed. You need to lean into that experimentation. And I think companies that aren't are probably going to get somewhat left behind. And so we have to really encourage that because it's just going to be critical as we go into the future. Like the market is, I think volatility is something we can continue to count on. And so we got to be smarter, making sure that our commercial surgeons, so to speak, get sharper scalpels.
I've been joined today by Alexis Underwood. Alexis is a managing director at Wynnchurch Capital. Any parting shots before I let you go for today?
I think that, I talked a little bit earlier about change management being so critical. When I think about a lot of the commercial situations we work on, I really think of it as like 10% strategy, 40% execution, 50% change management. And especially in a private equity world where you have an operating partner, you've got a board, you've got a management team, I find you have the most success when you really focus on what you agree on. And it may not be everything, but start there, gain the trust, work on things you can align on and agree. And that will often snowball into other things. And so it's really, it's focused on the human side of this, even though the data is very important. We all care about the P&L, but it's really the human side that wins out.
Alexis, thanks so much for being with us. Really enjoyed today's conversation.
Thank you so much for having me. I really enjoyed it as well.
Thanks for tuning in to the Charles Aris podcast. For more insights and resources, visit us at www.charlesaris.com. We'll see you next time.